Money. It's made the world go round for as long as we can remember. But right now, at this very moment, it may be in the midst of one of its most fundamental changes ever. In this episode, we're going to talk to you about CBDCs. They are something we've mentioned before, and we will most certainly be mentioning them again. But it's important we make clear just how big a deal these things could be. So let's talk about money. It's been around for a while. The first known form of currency is thought to be the Mesopotamian shekel, which emerged something like 5,000 years ago. Gold and silver coins, meanwhile, came into usage around 650 BC, and then things sort of stuck around for a bit. Since then, we've had paper money, and much more recently, of course, we've had electronic trading, both of which proved to be revolutionary in different ways. But the principles behind how they function, and more importantly, who controls money, haven't really changed. CBDCs, though, could finally be that change. Central bank digital currencies are basically digital versions of fiat. They are controlled by governments, either directly or through intermediaries like banks, for instance. And wherever you are in the world, one is probably coming your way soon. As of July, more than half of the world's central banks are reportedly either exploring or developing one. 2 have already been fully launched. The Bahamas' Sand Dollar made its debut in October 2020. Nigeria's Naira arrived last year, meanwhile. But perhaps most of the attention right now is on China, which began piloting its ECNY more than 2 years ago. An official launch date still hasn't been announced. Eyes, of course, remain on what happens next in Beijing. But in general, for CBDCs, big questions remain. How will they change our lives, and should we be worried about them? We're going to try and scratch the surface a little bit with both those questions and start small, looking at how they could potentially help. Buying something like a cup of coffee might, for instance, seem like a straightforward transaction. Someone makes you a coffee, you pay them. But by simplifying what happens to the payment after the transaction, your cup of coffee could potentially become a lot cheaper. That is, according to Yuval Ruse, co-founder and CEO of Digital Asset.
The opportunity is really to actually simplify the post-trade of those payments, and hopefully as a result reduce the cost to effectuate these transactions. And as we know, there are places in the world where they tell you that if you're going to use a credit card, which is convenient, you're going to be hit with 2.5%, for example, surcharge. And that's the area where I think you will see an opportunity to change it.
So a cheaper and more efficient system is ultimately one of the goals with CBDs, but there is a flip side to them as well. Because of blockchain data, the government essentially knows you now bought that slightly cheaper cup of coffee. When you extrapolate that knowledge over every single thing you buy, you might start to get a sense of why some people are worried. The concern is that governments will be able to track far more information than merely the cups of coffee that you're purchasing, far more indeed than they ever have before. And this concern has been highlighted by many, including the likes of the World Economic Forum and the European Central Bank, to name just a couple of recent examples. However, not everyone shares the extent of these concerns.
I use Gmail, and all of my data belongs to Google, and they know a lot about me. And similarly with Facebook and other companies, we get a product for free, and in return we give up some of our privacy. I think that when it comes to financial systems, people are becoming even more sensitive, and I think that governments that would want to design CBDC with the ability to track citizens will be able to do that, and then they might have to think about, well, what would adoption look like, and can they have control over it? And I think that there are countries that, if do a good job, can also create CBDCs that don't allow the government to necessarily track every individual's activity.
Now, the IMF agrees on this last point. The International Monetary Fund said recently that digital currency technology could still provide some protections. But regardless, some, like Yuval, say we're already giving up this sort of privacy.
We all know that there are technologies that are not blockchain or DLT related that allow central operators, if I may say, to keep track of performance of users, and this technology will be no different. I would actually say that in most cryptocurrencies today, there are already solutions that allow exchanges and different operators to know quite a lot about their users' behaviors.
Verifying user identities is also likely to remain a key part of any financial future. Preventing fraud and tracking criminal activity are key reasons why things like utility bills and IDs are needed. These so-called know your customer requirements would likely be the same for any type of CBDC. For some, however, privacy concerns will remain a big deal. For others, though, a life that's just even a little bit easier could ultimately be worth it. Let us know which side of the fence you're on with this argument, though. CBDCs, good or evil? Make sure you also hit that like and subscribe button to see what else is in store for the future of your money.